Headlines: oil stocks continue to march ahead on diesel and LPG price hikes. Both IOC and BPCL soar around 10% and HPCL jumps 5% in trade. Reliance Industries rallies on hopes of strong third quarter numbers. The stock gets a big boost after SR Oil reports the highest ever refining margins yesterday. And ET Now poll sees the Q3 profits at 91,462 crores, a jump of 5%. WIPRO disappoints. The company's IT business fails to match the sterling performance by Infosys and TCS. In other earnings, ITC continues to see margin pressure despite a jump in volumes. HDFC Bank's interest margins take a knock, while bad loans see a marginal rise in the retail portfolio. SEBI eases the offer for sale norms to ensure better institutional participation in the government's divestment program. The 25% margin requirements for funds will be removed, and also the OFS indicative bids will be visible through the day to ensure better transparency. UPA may be heading for a shake-up. Sonia Gandhi hints at fresh allies addressing the two-day Congress Chintan Shivir in Jaipur. The Congress president also says there is a need to strike balance between the government's policies and the concerns of the allies. Good afternoon, you're tuned into Business Day right here on ET Now. I'm Avan Dabash. A quick look as to how the markets panned out today. Well, you'd have to say that we got off to a great start. It was a two-year high for the frontline indices, but we tempered off by the day's close. So for the Nifty, we shut sharp higher by 25 points at 6,064. For the Sensex, 75 points higher at 20,039. Broader markets in comparison, very lackluster, and it was oil and gas stocks which really led the way today. So for the week, we went on to gain close to 2% on the frontline indices, and for the broader markets, though, it was a bit tepid. Remember, this week there was a lot of important data in terms of the inflation numbers, which slipped significantly. You had the diesel price revisions. Fairly good earnings growth is what we got started off with, which is why the markets digested all of this and went on to see quite a good rally. We're moving on from that. Let's deviate and talk about the oil marketing companies, which were certainly in focus today and on fire as well, as the much-awaited decision to allow OMCs to hike the diesel prices boosted sentiment. ONGC and Oil India too joined the party on hopes of lesser subsidy sharing burden. Reliance Industries moved up after the company showed an interest to hike the number of retail fuel outlets if the diesel prices are deregulated.
We hope that there will be increased frequency, and we hope we'll be reviewing this every month. And should there be a possibility, we would again take a view, and by this small margin we would adjust the prices. So the intention is to adjust the price, as we understand, over a period of time. To my mind, in terms of the impact on our health, this alone on annual basis will have an impact of approximately 12,000 crore reduction in our subsidies.
I think it's a very positive step, right step in the right direction, at least with this kind of increase which government has permitted. Of course, it is going to help us. Maybe it will take little time, and one doesn't know what will happen to the crude prices, what will happen to the exchange rate. So I am assuming that if things remain as it is, then over a period of time, maybe a year or so, subsidy will be totally wiped out. Something is better than doing nothing.
We have to work out the revised under recovery sharing based on the latest changes, and it will certainly be a positive move as far as Oil India's profitability is concerned. Keeping in mind the company's fundamentals and also the ability of the government to forge ahead with the reforms, certainly the shares which have been underpriced would get duly priced accordingly.
Okay, well, so you saw the good rally which came into most of these stocks, and that was some expert opinion on the same. But in some results which came out today, HDFC Bank put out its third quarter numbers. It was largely in line with what the street was expecting. Profits for India's third largest lender rose 30% to 1,859 crore rupees on a year-on-year basis. Higher loan growth and a relatively stable asset quality, that also helped the bank. Here's a word from the ED of HDFC Bank, Paresh Suthankar, on the margins.
I don't think there is a definitive trend if you've seen movements in both directions. But for this quarter, yes, it was at 4.1. I think going forward, we still believe it will remain in that range, which is again 3.9 to 4.2%. Sequential increase of NPLs, roughly 300 odd crores. About 80% or 85% of that has been across the full range of retail products. Of the retail NPA creation, about a little less than half of it would have come from the commercial vehicle and construction equipment businesses, which we had mentioned in the last couple of quarters has seen some increase in delinquencies. And the balance half of the retail NPLs are across the rest of the range of products.
Okay, so the counter ended in the red by just about 0.6%. Simran Gill from our banking bureau now joins in for more on HDFC Bank's Q3 numbers. Simran.
Yet another consistent performance by HDFC Bank. Like expected, profits rose by 30%, strongly driven by net interest income, which grew nearly 21%. And of course, loan growth, which also was robust at 24%. Couple of things to note in the results today. First of all, asset quality. While asset quality has been stable and it's not a big concern as far as HDFC Bank is concerned, but this time around the gross NPAs, we saw a slight increase of about 300 crores. And of course, 80% of that has come from the retail side, few from the construction and commercial vehicle side. And as far as the asset quality outlook is concerned, the bank is very confident that it will continue to remain stable like it has in the past quarters. And moving on to margins, well, of course, the margins are also robust at 4.1%, much above other peers in the industry. But of course, we have seen a slight contraction on a Q-on-Q basis. But going forward, the management is confident that the margins will also remain between 3.9 to 4.2% range. And of course, credit and deposit growth. Something to note out here is while the rest of the industry is lagging at 11% on the deposit front, HDFC Bank is nearly going double. It's at the deposit growth is around 24%, and of course credit growth is also quite robust at 25%. So not too much of a concern even on that front. And lastly, lending rates. That's a question on everybody's mind. When exactly will bankers start cutting their lending rates? As far as HDFC Bank is concerned, like other banks, they're waiting for a cue from the central bank, what really RBI will do on Jan 29th, and then they will look at seeing how they can bring down their lending rate.
Thanks very much, Simran, for pointing out those details. But of course, in moments from now, we will be awaiting Reliance Industries numbers that will be put out. And there is a hope this time around that after the revival of SR Oil, which posted its highest ever gross refining margins, Reliance Industries is likely to follow suit. So most of the market experts are expecting the company to report its first profit increase after a decline in the last 4 quarters. Let's get an Ajay Sharma, who now joins in from our research team to break down the numbers from the big boy. Ajay.
Avan, I would like to say that conservatively speaking, 7.5 to 8.5 is a broad range for GRMs for Reliance Industries third quarter. But look at the way stock has actually ended today. It's already made a 14-month high. And after looking at SR's refining margins, I think it will be prudent to expect a little premium over that. So closer to $10 is what the street is actually penciling in. Coming to, of course, after taking into account very good refining side of the business, other income will be very important too. With big chunk, almost a third of chunk of net profits now come from other income. So for regionally, margins are doing good. Reliance will definitely be benefited from that. If you talk about the petchem side, it will be actually a mixed picture. Volume picture should be good, but because they have a very wide range of products they deal with, the pricing on an average would be slightly on the lower side. Coming back to the last is oil and gas, which is not doing a whole lot, and the expectations are also not that great. So on a net basis, they should be able to surprise the street. This is what I am picking, fresh from the dealers, the way the market actually have taken Reliance Industries stock just about, at the closing 1 hour ahead of the numbers actually coming out.
Okay, so expectations have certainly been built in. We'll have to see whether it delivers or not. Thanks very much, Ajay, for giving us those details. But in some results which came out today, ITC jumped and trailed at its third quarter. Top line and bottom line growth came in above the street estimates. The margins this time around, however, disappointed. They were down by almost 100 basis points. Let's get in Navneet Saluja from our research team to break down the ITC numbers in greater details. What were the positives and negatives, Navneet?
Well, Avan, as mentioned by you, the numbers were above the street estimates. The top line and the bottom line was way above our estimates, but the major disappointment came in the form of the EBITDA margins, which actually fell by about 100 basis points. But overall, if you look at the numbers, they were good. Segment-wise also, if you look at the main segment of the company, which is the cigarette segment, the EBIT growth from that segment was about 21%, in line with the street estimates. In fact, the EBIT margins from the cigarette space, they grew by about 400 basis points. And if you look at the non-cigarette FMCG space, well, the sales from that segment were clearly robust of about 30%, and the losses have too declined from the non-cigarette FMCG space to around 23 crores. You can expect this segment to go a bit positive in the coming quarters. If you look at the other segments like Agri, that did quite well in this quarter. The revenues grew by robust 43%, whereas the EBIT was about 22%, and paper boards and hotel, as usual, they were the laggards in this particular quarter as well. Overall, the numbers were good. Well, we are still awaiting for the cigarette volume growth. What I gather from the analyst, it is about 1.5%, and if that is the actual volume growth from the cigarette space, the numbers have been quite in line with what the street was estimating.
Thanks very much, Navneet, for giving us the highlights of the quarter for ITC gone by. Still awaiting cigarette volume growth. Meantime, WIPRO, that one was hammered in trade today after its third quarter net profit did manage to still beat street estimates. It ended lower by close to 7.7% to 397. And the reason for that was really the performance of the core IT services business that turned out to be weaker than what the street was expecting. The management of WIPRO, in conversation with our stocks editor Nikunj Dalmia from their headquarters in Bangalore, spoke more about the road ahead.
What are we doing? A lot of investment in the front end, trying to understand the customer pain points, getting into more and more domain specialization and that, so that we are able to help the customer and partner with them as we go along, as opposed to after the customer has decided that this is what has to be outsourced, then go through a competitive environment of trying to win it. So, and that's an investment area. A, the quality of people that we are putting in the front end. B, the kind of, whether it is a hunting or from a client mining point of view, solution practices. Secondly, we are investing a lot in terms of advanced technologies as well as business application services, and enhancing the solutions or process assets related to application development, application maintenance, and also infrastructure services point of view. So those are, so yes, there has been a good guy in the form of exchange, but we are using it to be able to enhance our quality or any sales engine in terms of a sales and marketing type, and also trying to create a lot of productive tools which will help us to be able to win more business.
You think the trajectory is headed higher?
We think, we are positive, cautiously positive in terms of trajectory.
Have you got any cancellations for the quarter gone by?
No.
Any word on IT budget so far?
A little bit early yet. We'd have a better understanding as we get into the next week and the week after.
Or what
but
are
right
the
now,
initial feelings?
I think flat in terms of budgets, but we see discretionary spend being a little more positive than we saw at the same time last year.
Which means for you to grow, you'll have to gain market share.
We'll have to get market share.
Have you gained market share of it?
So here's what we have done. If you look at our hunting business, which is really our market share game, we've got about 160 hunters right now. And they're out there kind of looking at seeing what they can do in terms of gaining share in existing services as well as the new services. 50% of our deal wins in the last quarter have come from hunting.
Okay.
So that is making progress. Now, am I thrilled with the progress? The answer is no. I think we have plenty of work to do. And fundamentally, to get this group productive, we think it's going to take a couple of more quarters.
It was the currency markets which were also in focus, given that the rupee hit a 2.5-month high against the US dollar as the money markets steer the partial deregulation of diesel. As we speak, it's 53.82 against the greenback. Let's get in our currencies and commodities editor, Manisha Gupta, who joins in to tell us which way the rupee is headed. Manisha.
Well, thank you for that. Yes, more than 1% of gains coming in for the Indian rupee, and that one is trading at a 2.5-month highs. The major reasons for the boost coming in for the rupee, of course, has been the partial diesel deregulation. Markets feel that it would lead to shrink the subsidy burden and also reduce fiscal deficit, and that really has augured well for the Indian rupee. Apart from that, there also have been those talks about 0.25% to 0.5% of an interest rate coming in when the RBI policy meet happens. That also has supported the rupee. You have seen the Indian equity markets gain up. You also have seen the dollar index decline into the global markets. All of that has led to support in the Indian rupee as well. 54 breached quite easily into the markets today. 53.60 to even 53.5 is what the markets are targeting as the next best support come when we open on Monday.
Thanks very much, Manisha, for giving us all of those details. Well, moving away from that, market watchdog SEBI has relaxed the offer for sale norms to ensure better institutional participation in the government's divestment program. The 25% margin requirement for funds has been removed, and OFS indicative bids will be visible throughout the day to ensure better transparency. Let's hear the SEBI Chief UK Sinha speaking more about that.
So far as the OFS is concerned, there will be the earlier mechanism of 100% upfront margin. That will continue. The earlier requirement of 25% margin will be removed. It won't be a requirement, mandatorily, but there are one or two conditions here. One is that they cannot revise it downwards. They cannot withdraw this bid. And in all these cases, the rules of the secondary market will be followed. There will be visibility of the order book. As the book is getting built, the visibility will be there throughout the day. Throughout the trading session, there will be visibility of the bid.
Moving on then, and the UPA may be heading for a shake-up. Congress chairperson Sonia Gandhi hinted at fresh allies. The Congress brainstorming session began today in Jaipur with an eye on the 2014 general elections. Emphasizing on the trouble the party has faced from allies in the recent past over crucial reforms, Congress chairperson Sonia Gandhi asked the members to be proactive and ensure that there is a balance between its policies on one hand and the allies on the other.
We must admit that we now face increased competition and inroads have been made into our traditional support base. There are some states where we have been out of office for too long, and although I do believe that being in power is not the sole purpose of political activity, this does have an adverse impact on our morale and organizational ability. In states in which we are in alliance, we have to strike a fine balance between respecting these alliances and ensuring that the party rejuvenation is not compromised.
There are some states where we are out of power for a long time, my own state of Tamil Nadu. There are states we are not in power for nearly 10-15 years. Therefore, those are the states where the climb is very, very steep. But there are other states where we can win back power, where we are not in power. We need to get people in their 30s and 40s taking up leadership positions.
As Mr. Rahul Gandhi is concerned, please don't force him. Let him chalk out his own life. Let him chalk out his own roadmap. He's already heading the group to plan the 2014 elections. He's already responsible for Youth Congress and NSUI, in which he's done a remarkable job.
अभी कौन सा कांग्रेस पार्टी अकेले अपने बलबूते पर पावर में, ये कौन सी नई बात कह रही है? सन 2004 में अकेले बलबूते पर नहीं आई, फिर उसके बाद फिर चुनाव हुआ तो फिर भी अकेले अपने बलबूते पर आई. तो कांग्रेस पार्टी के नेतृत्व में यूपीए की सरकार चल रही है, ये कोई नई बात नहीं है.
That brings us to an end of this edition of Business Day. Thanks for watching.